Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/The Smattering, to get access to the 10 best stocks to buy right now. I'm Jason Hall. This is The Smattering. I've got Tyler Crow here with me, and we are going to talk about each of us, if we could only own one renewable energy stock, what that stock would be. Hey, what's up, Tyler?
Jason, I would take a more measured approach, but in terms of investable ideas, but there's some out there, and we can discuss them right now.
Yeah, I think I agree with that. As a cohort, as an industry, it is certainly going to be a net good for humanity. What's less clear is how much of a net good it is going to be as an industry, a net good for investors in it. We've certainly seen areas of it that have been tough. And what's interesting is that the stock that you're going to talk about is actually one that comes from that industry that historically has been one of the worst places for investors, but it's the exception that proves the rule.
So it's in solar panels, and the company is First Solar. The solar panel manufacturing industry is an absolutely brutal one. Like, it is, for the most part, it is a commodity product for all the things that we've talked about growth and the total addressable market that could happen in renewable energy. The fact of the matter is that all that matters is getting your cost per watt to the absolute lowest number possible, which means that you have to sell for the cheapest. You have to have a sufficient enough tech to get your costs down, and you throw those things together, and it makes for a brutal industry. And we've seen a lot of companies come and go. This is incredibly tough. And for the most part, First Solar hasn't always been the most advanced tech. They haven't had the most growth. But the one thing that First Solar has had that I have had the most confidence in, and why I want to own them, is they have had the best management team. Bar none. I don't even think anybody can even compare capital allocation and being stewards for shareholders than the management team at First Solar. They always are holding boatloads of cash and barely any debt. When they need to invest, they have that cash pile. They don't have to go to market to sell equity. They don't as much. They don't have to go and raise capital in the debt markets and become these over-leveraged businesses that we saw elsewhere, like Jinko Solar, Renee Solar, Trina Solar. I know you remember all these names coming and going, but First Solar has been that kind of solid, we're going to do this, we're going to manage it responsibly. And they've been hitting the growth lever a little bit harder lately, in part because a lot of other companies have fallen to the wayside and it's their time to invest. But again, if I'm going to really hitch my wagon to somebody long term, I want to see a management team that has shown they can do it through the cycles of the industry. And that's something that First Solar has done better than anyone else.
I also own First Solar, and for the same reasons, because this is, as much as we see that long tail of growth for solar, it is a highly cyclical industry, and they've made that balance sheet a source of strength that's allowed them to continue to invest in their business across the cycle when others have been struggling just to have enough capital to keep the lights on. Their balance sheet has always been a real source of strength to unlock the economic potential of their operation. So I agree with you there. I want to take this in a different direction, though, because I want to talk about a company that I think is a great way to decouple the business from those cycles. And as an investor, one of the best ways to make money investing in renewable energy companies are the ones that are either financing these big wind and solar farms, or they're operating the wind and solar farms and they're selling the power on long-term contracts, because then you have stable income that comes in on a consistent basis. You sign a 20-year contract, have really good financing, and you buy those assets, you build them at the right prices, and you can make a really strong long-term free cash flow from these assets. And the company that I want to talk about is Brookfield Renewable. Their ability to operate profitably in the areas that they go into is bar none. So a couple of things that are really attractive. First of all, this is the capital heavy side of the business. You're providing services and power to the end customer, but you have to invest in a power plant. You have to build those assets out, or you're financing them. So we start with an investment grade balance sheet. That's hugely important because cost of capital is a differentiator in this space. If you can get a lower cost of money, you're going to make more money immediately, and it gives you more margin of error for where you can operate. They've also diversified. 6 or 7 years ago, the vast majority of their power came from hydroelectric. It's about half of their business is now hydroelectric. They've really invested substantially in wind and solar as those asset costs have come down substantially, and it's positioned the business really well. Now, as an investor, what have you gotten? If you look at this company over the past decade, you've earned a nice 15% annualized rate of return. That is wonderful. Part of the way they've done that is through that distribution, that dividend. Since 2014, they've grown that quarterly payout an average of 6% every year. That's far above inflation on a historical basis and has really done a lot to juice returns. Now, I want to say this, and I think it's a fair thing, Tyler, you'll probably agree with me on First Solar as well. Neither of these stocks look particularly cheap right now. As a matter of fact, I would say they're both probably more on the high end of their valuation, or maybe even expensive. So this isn't Tyler or I, either one, really making a call to say, go out and load up your portfolio with them. But these are the winners over the long term. These are the ones you want to watch. If the market gives you an opportunity to buy them at better valuations, I think these are the ones that you certainly want to own.